Hey, what's going on, guys? Welcome back to the channel. So, do you have some minutes to talk about Bitcoin dominance today? Knock, knock, knock. What's going on? Hope you guys are doing well. Make sure you are hitting the like button, hitting the subscribe button, and dinging the bell to be notified when I make cryptocurrency content, because you do not want to miss these updates, because we were pretty dead on with the trade setup here, with basically telling you guys on the 25th that we were potentially going to fill this gap. This was on the 25th that we posted this in the Discord, so make sure you guys are in the Discord. We were thinking that there was a high chance that that gap was going to get filled, which means that we would have had another $9,000 dump on Bitcoin, and that actually did happen. We had that dump. We filled the gap here, as you can see. We had that massive gap that was here. Is a little more visual on the daily. So if we go on the daily, you can see where that gap was filled. And a lot of people are wondering why the Bitcoin price and alts and just the entire market went down as a whole. Well, we have still been in QT, and we're going to get into what that means and how this relates to the Bitcoin dominance, the strength of the dollar, the federal interest rates, and how that all correlates together. And shout out to Benjamin Cowen for always giving us that nice reminder of those things. So one of the big reasons why Bitcoin went down so much recently is because we had massive outflows of the ETF. So a big seller was BlackRock, selling a big portion of their ETFs. So we had more outflows than the buy-in pressure that we had for the past couple weeks and the past months leading up into this selling pressure. So that led to also the exchanges and the whales following suit and offloading the bags and kind of doing a rinse and repeat, where they were trapping the longs, trapping the traders that were 50x, 100x leveraged in Bitcoin longs, ETH longs, and just across the market. So they trapped those longs with faking, volume and high liquidity, and then smashing it to the downside, which eventually filled that gap that was here on the CME futures that was created in November during the election Trump pump. So how does this all correlate? Well, when you're looking at the Bitcoin dominance and you see how the Bitcoin dominance and the federal fund rates have correlated together in previous years and previous cycles, we can see here that, in 2019, we had Bitcoin dominance at 51%, but the Fed rates were at 2.2 to 2.5. And we were still in a quantitative tightening market structure. And then you can see here in 2020, towards starting in March in 2020 is when QE started, the quantitative easing, the QE. So 2020 and 2021, you can see compared here, if you look at it on the chart with that federal interest rate, you can see that during that time, this is when we had some of the lowest interest rates going into that portion of the market. So you can see here, right here, 2020, and you can see that basically interest rates were almost almost close to zero, and it was very much eased up. And then you can also see here that this is when we also had the Bitcoin halvening. We had the recovery year, and then also the bull run year, and then a double top fake out that brought us into that peak of the bull run last cycle, which was in November 2021. Now you're seeing this arrow here. So this arrow, we're going to correlate how this also with the interest rates and the strength of the dollar is all correlated onto how we are going to go into either a long bear market, or a overextended bull market and bull run cycle, all dependent on the federal interest rate, funding rate getting eased, and also the strength of the dollar going down. Because what actually happened was when we had that 60% downturn on Bitcoin is when we started to get the dollar strength going up. And since the dollar had been going down in strength from that peak, when we had that, the biggest crash into the bear market, going into that low of 16,000 for Bitcoin, then that means we actually, from that bottom, started gaining more strength in Bitcoin and reached all-time highs by the strength of the dollar going down at the same time. So you can see, leading up into September, October of last year. Now that the prices have consolidated, we went and broke down off of a high of 109,000. You can see that the dollar actually gained strength. Now, we were thinking it was still going to break down on this wedge, but it ended up getting and gaining a little bit more strength. But now what we're going to start seeing is a possible breakdown of the dollar strength back down into this wedge, into the level of 98, because this is where we think we're going to have that equilibrium of the federal interest rate QE getting quantitative easing, just like we did previously in March of the last cycle. We could see that QT ending coming into March of this year to follow the same playbook that we've been basically seeing over and over again. People say that it's different this time, but it might actually just be the same, but just with different sentiment and narrative that has changed the game of how we're going to look at these markets. So it's really interesting to correlate these things together and also look at it in terms of the Bitcoin dominance, because this is how we're going to see when we're really going to get a altcoin season, because the altcoin season, I think, is not really going to take off until we actually get full quantitative easing and also the dominance getting a peak where I think we had the peak at 64%. And then we could see the dominance getting back down into these areas. If you're looking at this as a potential head and shoulders pattern of dominance, then you can see that we would be hitting this area of dominance going into March and April of this year to get us a dominance flip, a little bit more dominance going back into Ethereum. Now, to correlate this with the ETH BTC chart, this is also a big factor of when we are going to see this type of flip of the ETH BTC chart to where we start to actually see ETH stop bleeding into BTC. But the only way that we're going to see that happen is when we see the quantitative easing come in, because look, QE was right here, and then we had QT, which pushed it up and then eventually had Ethereum bleeding into Bitcoin. So once we see this start to swoop down, then we could start to see potentially ETH BTC finally bottom out and then start to see the recovery, where we start seeing that people are actually using some BTC to then also get a little bit of ETH because they feel like it might do a little bit of outperformance on against Bitcoin. Now, so this all can be overlooked very easily because of the nature of the meme coins, the fast casino mentality. But really, what we have to do is really pay attention to this stuff, because this is the metric that actually pushes the money towards the stuff that we want to pump, which is our bags, our altcoin bags, and also our Bitcoin. But we want to have all of these figures kind of line up, because historical data has showed us that as long as we get the Feds pivoting into QE and lowering the crunch on banks lending out money and the rate at which they will, then this will make risk on assets a little bit more favorable across the markets. And so let's just keep this in check, and let's make sure that we still have this on our radar, because this is going to be the metric that gets us into that sweet zone that we want to be in for the bull run, which, if we go by historical data of the halvings, we're usually about 500 days after the halving is when we get the true peak. So if we go from where the halving was, which was in April, it was the end of April. So we have it right here, close to there. So kind of approximation of April, it was about April 23rd or April 24th. So if we just went, 500 days, just so 500 days, we'll just do 500 days on an average. That brings us to August of where we could see potential peak prices. And I kind of have this this, thesis thought process that if we get the QE easing going into, the rest of this year, then it could line up that in August and September is when we would have the true risk on run of speculative assets, and it could all line up with all of these bullish things that are happening, which is now this bullish news that was announced that the United States President Donald Trump will be hosting a crypto summit in Washington, D.C. on March 7th, which is going to be featuring prominent figures from the industry. So this is huge. So there could be a bullish trade setup going into just the next couple of days, going into March, going into next week. We've got to see how this weekend's going to play out. Some people are thinking that we could still see some more downturn because we did have this wick into that CME gap. If we want to look at the CME gap, the gap here, as you can see, was pretty much filled. It went right into that range, but there was still a little bit more room to go. We could have gone to 77, but we wicked right to 78.7 and then had a nice quick bounce from there. So this is why people are thinking, okay, I don't want to get faked out again. Was that the true bounce? Well, we just have to see. The daily moving average is still sitting at that kind of that 76,000. That's on people's radar. So that's why we have these areas marked as some potential drawdowns that could really give us a mega bounce to the upside, push us back up to that 100K. But we just have to be patient, guys. But thank you so much for tuning into this analysis, this video. And we really do appreciate you guys coming into the live streams like you've been on a daily basis. And just make sure you guys are checking out all the links in the description, hitting the like button, subscribing, sharing this to your friends, people who haven't gotten into crypto so they can understand how all of these metrics from the traditional finance system, monetary policy, and all of these things have a grasp on these things and know that all of this stuff is going to correlate into your speculative assets, the things that you're investing in. And also it helps you to plan out for the future on how this monetary policy is going to affect your overall life, not just your crypto portfolio, but just like how you're going to strategize your own monetary policy in your family and for yourself. So guys, thank you so much. And shout out to Benjamin Cowen for always putting that Bitcoin dominance in our head. And we will see you guys on the next video. Peace.